Fourie Steyn, this is also a very, very good question. It tests a lot of principles, so I would really strongly recommend that you work thoroughly through this question. Fourie Steyn Dance School commenced business during 2007 and its owner is Lien Fourie. Lien in the day was a Springbok dancer. Frans Steyn, her husband, creates the most creative ballroom dancing outfits, and that is the reason why they decided to commence with a dance school. Lien, for all the years up to now, has been giving dance lessons, but is not getting younger and is struggling with arthritis. This year she appointed some dance instructors and Lien took care of all the planning, admin and accounting tasks. Currently the clothing Frans manufactures is the main stream of income and second in line is the dance lesson income. The main accounting policies adopted by the entity are as follows. A settlement discount on credit sales of 10% is offered to customers if they settle their accounts within 30 days of the sale. It is the policy of the entity to create an allowance for settlement discount on the date that the sale of all credit sales transactions are taken place. Fourie Steyn adopted the policy to create an allowance for settlement discount on the day credit purchases also occur. Fourie Steyn adopted the policy to debit credit losses when a debtor's account must be written off as irrecoverable, so they don't make use of an allowance for credit losses account for that purpose. Frans and Steyn add a profit margin of 45% to the cost in order to calculate the selling price of the outfits, so the clothing. So that markup percentage equals 100 plus 45 equals 145. Upon the determination of dance lesson income, the cost to provide the service is taken and a 40% markup is added. So dance lesson income is going to be, the cost of the income on that is going to be calculated by taking the cost to provide the service plus 40%. Good. Fourie Steyn exceeded the threshold for value-added tax registration during the 2013 financial year. They registered for VAT from 1 June to 2013. Guys, the VAT rate that we have to use is 14%. So assume a VAT rate of 14%. Good. Hopefully you've worked with 14%. The following represents a pre-adjustment trial balance of Fourie Steyn Dance School as at 31 May 2015. Capital, drawings, land buildings, vehicles, accumulated depreciation on vehicles, equipment, accumulated depreciation on equipment, trading inventory, bank, fixed deposit, petty cash, trade debtors, VAT control, trade creditors, allowance for settlement discount on the debtors, and then the allowance for settlement discount on creditors, sales, cost of sales, sales returns, dance lesson income, bank charges, rent expense, postage and stationery, credit losses, and salaries. And then they give me a lot of additional information, and you have to do the following. Number 1, prepare the following notes to the financial statements of Fourie Steyn for the year ended 31 May 2015. Cash and cash equivalent note. And that is very good that we ask this one, because I don't think somewhere in another question you have seen that we've asked that note. Trade and other receivables, inventory, and trade and other payables. Now what they didn't tell you here is that you don't have to give the accounting policy note. So the accounting policy note, if you did write it, it's, oh, here it is, comparative figures and accounting policy notes are not required. So let's go back to the additional information and let's tackle it one by one. The first thing that we're going to do is the cash and cash equivalents note. Good. Now they give me the bank account balance and they tell me that the bank account balance up till now is 189,000 Rand. A bank statement was received from Capnet on 27 May 2015 and the following items could not be marked off against the cash journals for May. So if applicable, it means that we have to pass those entries in our book still. The first one was bank charges, 855 Rand. So obviously what we're going to do is we're going to debit the bank charges with the VAT exclusive amount of 750 Rand, and we're going to debit our VAT account with 105 Rand. So that would be take care of the bank charges. So if we have bank charges here, 750 Rand, we're going to debit against that account. And against our VAT control account, we're going to pass a debit entry of 105 Rand. So that means we're going to deduct 105 Rand from the credit balance that we currently have there. I would strongly recommend that you write in brackets debits and credits, especially if that credit balance should turn around into a debit balance. Then you're going to be total screwed if you don't keep changes of what am I working with, debits or credits, or what am I talking about, because then the pluses and minuses doesn't make a lot of sense anymore. Good. Credit entry, interest on fixed deposit, 7,500 Rand. Let's just park that one for a moment. Credit entry, fixed deposit cap net, 35,000. Now listen, these credit entries is credit entries on the bank statement. So therefore, on our books, it's going to represent debit entries. So we have received 7,500 and we have received listen carefully, 35,000 Rand. So it meant that we didn't make the deposit, then it wouldn't have been a credit entry on the bank statement, then it would have been on the bank statement a debit entry. So let's park that one. It's all about contract B here. Then a debit entry, check 172, beneficiary municipality, see note 12, 7,250 Rand. During May 2015, a deposit was paid to the local municipality. Check 172 was issued, but not recorded in the cash journal. This amount should have been paid on 1 March 2015 when the rental contract was signed for additional premises. The deposit relates to deposit on rates and taxes. Now, this is a deposit in the true sense of the word. So we're going to receive this deposit back someday on a rainy day if we're going to vacate the premises. So I'm going to debit my deposits, which is going to be part of trade and other receivables. And we're going to credit our bank with a 7250 because we have paid that amount of money. So here in our bank account, we're going to credit bank and we're going to debit the deposit. Then we're going to have, obviously all these things have to be recorded still in the bank account. So that one is going to reduce our bank balance with 855. This one is going to increase our bank balance with 7,500, increase our bank balance with 35,000, decrease our bank balance with 7,250. Another debit entry, debtor TO good RD check, see note number 3 for 600 Rand. Now in note number 3 on 1 May 2015, Mr. TO Good had a balance in his debtors account amounting to 667. He qualified for settlement discount, that is why the RD check was only for 600 Rand, because he took a settlement discount of 67 Rand, which then panned out up to 15 May 2015. So that settlement period has expired. Mr. Theo Good did settle his account by means of a check payment on the same date, and then the thing RD'd. So therefore, this guy is not entitled on anything. So we are going to take out that settlement discount. If we're going to pass an entry, what are we going to do? We are going to debit the debtors account with the original debt of 667. We're going to credit our bank with the amount of the RD check of 600 Rand. Then we're going to credit our sales account. Remember, the difference is now our settlement discount, and that settlement discount was forfeited now. So therefore, the VAT exclusive amount, the 67 divided by 1.14, equals then an amount of 59 Rand, which we are going to credit ourselves with. And we're going to credit our VAT account with 59 times 14%. And then we have removed the original entry that we've passed in our books. So sales, we're going to credit with 59 Rand. So we're going to increase our sales with 59 Rand. We are going to credit that with 8 Rand. So plus 8. We are going to, that's those two. We're going to credit bank, which we are going to do now in the bank account, and we're going to debit our debtors with 667 Rand. Right on top. Good. Now let's read number 2, because number 2's got to do with the 7,500 and 35,000. The fixed deposit per the trial balance constitutes 2 separate contracts with Capnet Limited, that's the bank. Now if you look at here, we have on our trial balance, fixed deposit 135,000 Rand. Good. Now they tell us the fixed deposit, so we said there the fixed deposit there equals 135,000. On 1 June 2014, the beginning of the last financial year, 80,000 Rand was invested at 6.75% interest per annum. This amount was increased to 100,000 on 1 March 2015. This contract stipulates that the deposit requires a 32 days notice should the amount be freed from the contract. Now, there's no indication in this question that we have actually asked for the upliftment of this fixed deposit. However, if we look at contract B, I'm going to work out the interest now for contract A. Contract B, this fixed deposit was invested on 1 June 2014, same date, on a 12-month fixed deposit, so from 1 June to 31 May of the next year. Fourie Steyn did give notice on 1 May 2015 and the contract was not renewed at 31 May 2015. So that is where that 35,000 increase in the bank account balance, the bank statement balance, took place. They made initially a fixed deposit and now this deposit has now expired, so they have credited the deposit account and debited our bank account. Guys, it is 2 separate accounts. A savings account is not a current account. A fixed deposit account is not a current account. You have 2 different types of bank accounts then. One being the deposit account, one being your current account. And this is now my bank current account, which has only an impact on the deposit account either when we're going to make a deposit or either when a deposit's been repaid into our normal current bank account. Good. The interest rate applicable for the 12-month period was 5.9%. So let's quickly calculate our interest. This one was 80,000 Rand at 6.75% from 1 June to 1 March 2015. That is 9 months. And then that gives us a total of 4,050. Then we had 100,000 Rand invested. Multiplied by what? Again, 6.75%. Multiplied up to the end of the financial year, 3 months. And that then gives us a total of 1,688. So the total of 4,050 and 1,688 gives us a total of 5,738. Good. Let's look at this one. This one, contract B, we had a fixed deposit for the whole year for an amount of what? Of 35,000. Remember the total deposit was 135,000. 100,000 was contract A. Therefore, 35,000 remaining amount, which also equaled that 35,000, was contract B. So 35,000 multiplied by an interest rate of 5.9% for the whole year, because it was lying there for the whole year, equals an amount of 2065 Rand. 2065 Rand. So the total interest that we had was the 5738 and the 2065. And that gives us a total of 7803. That must be my interest received in my income statement. If I go to my trial balance, however, you will see here that we have nothing for interest. If we go back to number 1 here, they say credit entry, interest on fixed deposit, 7,500. So that 7,500 we are now going to account for in our bank account. Once we have accounted for the 7,500, it means that we still are entitled on interest received of 303 Rand. So the total income statement interest that we're going to record will be the 7803. That 303 Rand we're going to have debit accrued interest, credit interest received 303. So here we want to add, because at the end of the day we have to do trade receivables and trade payables and the whole caboodle. So let's write here accrued interest. And here it's also, well, if you've written down your templates, you could have parked it immediately where it should be in your template. So that is accrued interest 303, and it's interest receivable. So this would be a credit balance. Sorry, not a credit balance, a debit balance, because they still owe us the 303 Rand. So interest income, you're going to credit, and then that is also not here. Interest income, but that's not actually required from you, equals 7803. Good, let's go and record those transactions that is currently lying and that we should update our bank account with. Now, before I'm going to do that, I just want to jump here to number 6. During a control audit done by Lynn herself, she found that a petty cash voucher issued, petty cash, guys, is cash. You have to show cash and cash equivalents. Issued during May 2015 was never recorded. Now, if you go back here in your trial balance, you will see you have a bank balance as well as a petty cash balance. Each one of them having their own balances. So this is all about the 403 petty cash. Now, this petty cash voucher indicated that an amount of 342 Rand was paid to the SA Post Office in order to renew the post box for not only Fourie Steyn, but also to renew the post box for Lynn's daughter. The rental of the post boxes by the South African Police is standard rated supply. They don't have to tell you that, you should know that. All rentals on post boxes are the same. So if we want to calculate what is that 342, we would say, well, 342 is actually 2 payments made in one. So that 342, if we divide it by 2, gives us a total of 171. Now, once the 171 is going to be against drawings. Debit our drawings. Oof, there's a lot of spelling mistakes there. It's my little problem here. Debit drawings of 171. Debit postages and other expenses. I think you have some kind of account like that, 150 Rand, and debit VAT with 21 Rand. And then you have recorded that transaction. So if we're going to update our trial balance drawings is going to increase with 171. VAT control is going to have a debit in of 21 Rand. And here in my income statement, postage and stationery is going to increase with 150 Rand. The 342 Rand has to be posted against my petty cash account. So my petty cash account, which is that account there, is going to reduce with 342 Rand. If we're now going to have a look at our bank account, the bank account is going to start off with a balance of 189,000. There it is, bank account 189,000. Then we're going to record all these differences that we have picked up out of our bank statement, and that is all entries that should have been passed in our books which hasn't been passed as yet. So here's our bank charges of 855, bank charges 855. There is our interest on the fixed deposit and our fixed deposit itself. It's credit entries on the bank statement, so it's debit entries in our book, so that's going to increase our bank balance, the 35,000 and the 7,500. Then this deposit that we've made with the municipality of 7,250, that is going to reduce our bank balance with 7,250. This credit entry of the order check of 600 Rand, that is also going to reduce our balance with 600 Rand. The petty cash was check number 163 for the petty cash impress restored to 500 Rand. Now what does that mean? That means that our petty cash float is usually 500 Rand. So we can pay some expenses out of petty cash, but then on a regular basis we are going to reinstate our petty cash to the impress account, and the impress account is the float amount of 500 Rand. So in order to reinstate it to 500 Rand, I will have to know exactly what my petty cash balance is going to be at this point of time. And the only thing that we've paid out of petty cash was actually our petty cash voucher, which has still not been recorded that we know of. So we're going to reconstruct our petty cash account as well. We're going to start with our opening balance of 403 Rand. So obviously there were some expenses that went through that account, and then we're going to record the 342 Rand. So the 403 Rand was the opening balance. Post office that was paid 342, that actually reduced our cash. So in order to have a balance, a float of 500 Rand again, we need 439 Rand in our petty cash account to bump it up to a 500 Rand again. So that's the reinstatement of the cash impress that we're talking about. We are going to cash out of our normal bank account a check for 439 Rand, or we're going to draw against our normal bank account cash of 439 Rand, which we are going to put into the petty cash so that the petty cash is going to have a float of 500 Rand again. So that's where that 439 comes from. When we work out the closing balance of the bank, it's 222,356, and then obviously the closing balance of the petty cash equals 500 Rand. Now let's have a look at our cash and cash equivalents note. Fourie Steyn Dance School, notes to the financial statements for the year ended 31 May 2015, 2015 Rand cash and cash equivalents. Bank, 222,356. Petty cash, 500. Where's that? 500. And then they've told us in the question that that one deposit is a 32 days notice deposit. That means I can actually get my money out within a 32-day period. Now, remember that the definition of cash and cash equivalents is all cash that I can make into money, into cash, or all accounts that I can cash in and get the cash out within a 3-month period. That will count as cash and cash equivalents. So, therefore, whatever the outstanding amount was on that 32 days deposit, that is going to form part of cash and cash equivalents. And that was that one deposit of 100,000. So the total of cash and cash equivalents 322,856, and that will be the amount that will appear under our current assets on the statement of financial position as cash and cash equivalents 322,856. So that's our first note that we have finished now. Right, number 4. Mrs. Young, a debtor with a balance of 1026, has been in arrears for several months. All possible means were taken to collect the amount, but it seems she just disappeared. Lynn decided to write off her amount as a credit loss. So obviously we're going to debit credit losses, expense account, but with what? With a VAT exclusive amount. So the VAT exclusive amount equals 900 Rand. So that's going to be a debit. And we're going to debit VAT. With a VAT amount applicable on that amount, and that is going to be an amount of 126. And we're going to credit our debtors with a full amount of 1026. So let's do that. Credit losses, you're going to add here. You have a credit losses account, there, plus 900. And again, I don't ask you the income statement in this question, so it's not necessary that you're going to do the income statement adjustments in most of the cases, but I do this just for completeness sake. VAT control is going to get a debit on of 126 Rand. It's a debit. And we are going to make the full adjustment of 1026 against our debtors account. Then we're done with that one. A credit invoice for a dance lesson was issued on 31 May 2015, but the new very inexperienced debtors clerk did not record the transaction. Lynn estimated the cost incurred in delivering the dance lesson amounted to 845 Rand exclusive of VAT. That was the cost. Now look at our policy. They say for dance lesson income, we are going to add a profit of 40% to the cost to provide the service. So therefore, if we want to go and calculate the value of the invoice that we're going to issue, it will be 845 Rand times 1.4. That gives us a total of 1183. And then we're going to add the VAT. The VAT is 14%. So 1183 times 14% equals 166. So the total value of the invoice is going to be the 1183 plus the 166, which equals 1349. So what are we going to do? Dance lesson income is going to be increased with 1183. Dance lesson income is going to be increased with 1183. This is VAT output, so VAT output is going to be 166 Rand, so it's a credit against my VAT control account, plus 166, which is a credit against my VAT control account. And then the debit is going to lie against our debtors. So our debtors account is going to increase with a full amount of 1349. Then we have accounted for that one. Good. A credit note issued to a debtor, Mr. G. Verloren, was recorded twice in the sales returns journal by accident and was posted accordingly to the ledgers. The total of the invoice, inclusive of VAT, amounted to 1174. So what are we going to do with that 1174? We're going to say, well, our sales returns was overstated with that amount, the VAT exclusive amount there, which gives us the VAT exclusive amount equals 1030. So that divided by 1.14 equals 1030. So let's do the entry. What are we going to do? We are going to credit our sales returns with the VAT exclusive amount of 1030. We are going to credit VAT with a VAT on that amount, which equals 144 Rand. And then we're going to debit our debtors account with the total amount of 1174. So if you're going to go back and we're going to do our adjustment entries, our sales returns, where are you? That sales returns is going to reduce with 1030. Our VAT account is going to increase plus 144, going to be a credit there, with 144 Rand. And our debtors account is going to, the total amount of that thing was 1174. We're going to debit our debtors account with 1174. So it's going to increase with 1174. Good. During a physical stock count that took place on 29 May, it was found that the following inventory was still on hand at year end. Trading inventory 69,700 and stationery 589 Rand. The staff who performed the stock count incorrectly included VAT to the values determined above. So what is the actual value of our inventory, our stationery on hand? It's 589 divided by 1.14 then. And that equals an amount of, I'm going to tell you now, 517 Rand. Good. Our trading inventory, if we take that amount of 69,700 Rand and we're going to divide that by 1.14, that is going to give us an amount of VAT exclusive 61,140. 61,140. Good. Right. Included in the inventory on hand is an item with a cost price of 850 Rand, exclusive of VAT. It is expected that the item of inventory can be sold during the 2016 financial year for 725 VAT inclusive. Now, clearly this number 9 is all about the NRV adjustment. They give you there a VAT inclusive amount, guys, and you must always remove the VAT because the cost price of inventory does not include VAT. Never, ever, 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 ever. So 725.14 divided by 1.14 is the actual net realizable value of that item, which is 636 Rand. So the cost price was 850 Rand. What is inventory? The lower of cost or net realizable value. So that means I'm going to make a net realizable value here of 214 Rand. So that amount of 61,140 is going to be reduced with a further 214 Rand, and the value of my trading inventory at year end is going to be 60,926. Oops, 6. Good. Right, for the stationery one, we still have to take out the 517 Rand. So remember, they want the inventory note, so that's going to be the inventory there. This is going to be the inventory here. So what we would have done is we would have debited the consumable stock inventory with 517 Rand, and we would have reduced our stationery with that amount of 517 Rand. Let's quickly go to our inventory note because we are able to finalize that note as well at this point of time. Just find it. Inventory. The trading inventory is the 6926. It was the 61,140 less the NRV of 214, 6926, 6926. Stationery was 517 Rand, so total inventory 61,443. So here's my inventory note. There you could have said stationery inventory, or you could have said consumable stock, 517 Rand. Good. So now we're done with that one. They don't want the income statement, so it's not really necessary to do the 517 Rand. Actually, the cost of sales must also be then adjusted with the NRV adjustment, which was then 214 Rand if you really want to talk about completeness. Good. And obviously inventory would have been the total amount of 214. Then we've done that one. A credit invoice received from ABC Limited for the purchase of a microwave oven for the staff tea room. We are not allowed to claim VAT on anything that we buy for our own staff. Was not recorded at year end. ABC Limited allows a 4% settlement discount for credit purchases. If the account is paid within 30 days from the purchase date, but then they've told us in the policies that Fourie Steyn adopted a policy to create an allowance for settlement discount on the day that the credit purchase occurs. So we have to create an allowance for settlement discount. Fourie Steyn expects to make use of the settlement discount. Good. Now we want to debit equipment, which is now the microwave oven, and the amount that we're going to debit there is the cost price 1680, which is 1750 times 96%, and that gives us an amount of 168. We are also going to debit an amount of allowance for settlement discount on creditors. With what? And we're going to credit creditors with a full amount of 1750. Now, what complicates this specific entry is the fact that we cannot claim that on that 1680. Our allowance for settlement discount can only be the allowance, the settlement discount net exclusive of VAT that we can receive. Although we cannot claim VAT on the equipment that we've purchased, once this creditor is going to give us a settlement discount when we settle this outstanding bill, the receiver of revenue is going to see it as two different transactions. The one transaction where you purchase the microwave oven, you cannot claim the VAT on. But on the second transaction where you're going to receive the settlement discount, that is going to charge you VAT on because it says it's income that you have received and that income is actually VATable. So the difference between the 1680 and the 1750 is 70 Rand. And that actually is the settlement discount. But if we argue that the receiver of revenue is going to charge VAT on that 70 Rand, then it means that the VAT exclusive discount is going to be only 61 Rand. So therefore, when I'm going to create the initial entry here, I cannot debit an allowance for settlement discount for 70 Rand because that is not the amount. If settlement takes place, what is going to be our entry? Let's do that entry, then you will see maybe clearly. Settlement. What's going to happen with the settlement? You are going to debit the creditor with what? The amount of the invoice. 1750 multiplied by 69% because you're going to make use of the settlement discount. So you're going to pay him 1680. You must now take out of your books sorry, you're going to debit the creditors with the full amount, 1750. You're going to credit bank with this amount, the 1750 that you owe him times 96% because you're going to make use of the settlement discount. That equals 1680. So I'm going to credit here. I must credit that because the difference between the 1750 and the 1680 is 70, but that includes VAT because the receiver is going to charge VAT on that amount. The VAT amount is 9 Rand. So if he's going to charge VAT of 9 Rand, then you do not balance, do you see? Because I still have to take out my allowance for settlement discount. I cannot take 70 Rand out because I cannot, then this whole thing is not going to balance. So what is the maximum that I can take out? I can only take out 61 Rand. So therefore, initially when I'm going to create the allowance for settlement discount, I can only put 61 Rand in my allowance for settlement discount because that's the amount which is the VAT exclusive amount that I'm going to take out eventually. However, the first transaction is not going to be in balance because there is a 9 Rand missing. And where do I have to park that 9 Rand? I will have to debit my equipment account, guys, because what do I debit with a cost price of an asset? All non-claimable duties. And that 9 Rand at the end of the day is going to increase my cost because I will have to pay over the VAT to the receiver of revenue. There I've showed you I have to pay over the 9 Rand. So this equipment did not only cost the entity 1680, which is 1750 times 98%, it also costed them the VAT, which they eventually has to pay over to the receiver of revenue, which is 9 Rand. Therefore, that is going to be an amount of 1689. All right, so once we have established this, we said, well, if we go to for completeness sake, equipment would have been added with 1689. Our allowance for settlement discount on creditors is going to be debited with 61 Rand. Our VAT control at this point of time, remember we're only going to record now the purchase transaction. So not the settlement, that is still have to take place somewhere in the future. We are just going to record the first transaction. So that one we've debited with 1689. That one we have debited with 61 Rand. There's no VAT that I can claim on this transaction, so I cannot do anything with VAT. And I'm going to credit my creditors with 1750. Okay. Then this thing should be in balance. Debit that account 1689, debit this account 61 Rand, and credit our trade creditors with 1750. The next transaction, that's a salary one. During the control audit, Lynn found that only the net salary of one of the dance instructors was recorded and the amount was paid into the bank account of the employee as at 31 May 2015. Salary deductions are as follows: 25% on gross salary, pension contribution 7.5% on gross salary, medical aid contribution 400 Rand, and unemployment insurance contribution 1%. The entity contributes to the unemployment insurance fund on behalf of the employees on a Rand for Rand basis. The net salary paid to the employee amounted to 6250. Now again here, you should know that net salary equals gross salary less all deductions. So if gross salary is X, because they don't tell me what it is, and my deductions is pay as you earn 25% of gross salary, less pension fund contribution 7.5% of gross salary less medical aid fund, it's a fixed amount of 400 Rand, and UIF equals 1% of gross salary. And if I have deducted that all, it would have given me my net pay of 6,250 Rand. So if we want to work out what is the value of my gross salary now, which is X, then you can resolve this equation, and you will see that X, i.e. gross salary, equals 10,000 Rand. And now it's easy. Pay as you earn, which is a creditor, is 25% of gross salary. Pension fund is 7.5% of gross salary. They don't say that the employer is contributing anything. Medical aid contribution is 400 Rand. There's a creditor for that. UIF is 1% of gross salary plus the entity's 1% of gross salary. So if you're going to look at that one, under trade and other payables, you can insert pension fund, 7.5% of 10%, medical aid fund, the fixed amount of 400 Rand, unemployment fund contribution, the 1% deduction made from the employee's salary plus the 1% contribution made by the employer gives you in total 200 Rand. SARS is 25% of the 10,000 Rand, 2,500 Rand, and there I've accounted for all my salaries of my deduction creditors, which will be form part of my trade and other payables at year end. Right, I don't have to record my salaries, I don't have to adjust that because nowhere did they actually ask me for my income statement. But if I want to do this now properly, I would have debited my salaries with a gross amount of 10,000 plus the employer contribution of 100 Rand. Good. The rental contract stipulates a minimum of 18,000, this is a new one, a minimum of 18,500 Rand per month or 8% calculated on the entity's net monthly dance lesson income and sales. Figures for May 2015 pertaining to sales. Now remember, we have sales income and we have dance lesson income, but that is for the year up to date. This one is based on a monthly amount. Figures for the month of May 2015 pertaining to sales and dance lesson income before any additional information was taken into account. So all our adjustment entries we still have to take into account was 300,000 Rand. The 4,500 sales returns per the trial balance occurred during May 2015. So there was also an adjustment there which we also have to take into account. The rental for May 2015 was paid on 3 June 2015 and was paid to Jackie Rentals, which is not registered for VAT. So let's have a look what our total income is where we have to make the 8% calculation on. They told us we have to start with a monthly income, which is 300,000 Rand. And then obviously we have to add to that all our adjustment entries. Now if we go to sales returns, it was 4,500 minus 1,030 because the 4,500 relates to the month of May. So therefore I'm going to take the 4,500 less 1,030 gives us a total of 3,470. Now it's returns, so therefore returns will actually reduce our income for the month, so less 3,470. Then we've made a few adjustment entries against sales. Sales, we have added 59 Rand to sales. I have forgotten to do this adjustment entry on the trial balance itself. Number 5, a credit lesson for the dance, for this 1183. We said that we had to increase our sales with 1183. So here plus 1183. The 69 Rand there, oh, I didn't account for it at all. The VAT was 166 Rand, and that was VAT output, so it had to be a credit. There it is, 166 against our VAT control account, and then debtors had to be increased with 1349. So debtors 1349. So that was that one there, 1349. So that means the adjustment entries then against sales itself was then the 59 plus the 1183. Plus 1183. And that then gives us a total sales for the month of 297,772. Now 297,772 multiplied by 8%. That is what they're telling us. They say the rental contract stipulates a minimum of 18,500 or 8% calculated on the entity's net monthly dance lesson income and sales. So that total gives us a total of 23,822. Minimum 18,500, but this amount is more. So our rental is going to be 23,822 for the month. So our rent expense, that is going to increase with 23,822, and then accrued rent expense. In other words, it's a creditor, is going to be 23,822. Good. So that's that one. Number 14. Lynn decided that at year end an allowance for credit losses must be created, as the actual credit losses have increased from year to year, and if she wants to be prudent in the preparation of financial statements, it would be best to calculate such an allowance at 5% of outstanding debtors. Now my outstanding debtors at this point of time is going to be 45,800 plus 667 less 1026 plus 1349 plus 1174. So if we go here, 45,800 plus 667 less 1026 plus 1349 plus 1174, and that gives us then a total there of 47,964. Now 47,964 multiplied by 5% gives us a total of 2398. Remember, we have to take out the VAT. So if we take out the VAT, then it means we want an allowance for credit losses at the end of the day of 2104. I don't want the income statement. I don't have an existing balance, but because I only want the note, I'm actually only interested in the closing balance. So in my trade and other receivables notes, my trade debtors would be this amount of 47,964. Less allowance for credit losses, that gives me a total of the one that we've just calculated, 2104. So net trade debtors, 45,860. Our deposit at the municipality, remember that very first one that we saw here with the bank statement? That's 7250 there. That is being part of trade and other receivables, and that is a true deposit, 7250. Accrued income, interest on fixed deposit, that was that one there of 303 Rand, was the other missing portion of trade and other receivables. So now we have them all in total 53,412. Here was just our interest calculation, which we've already done. We've done our inventory, we've done our NRV. Let's look at trade and other payables. Trade creditors, if we go back, trade creditors was a total of 69,720 plus the microwave oven of 1750. That gives us 671,470. Allowance for settlement discount on creditors. Now that was our allowance of 2788 plus the 61. The 61 was also on the microwave oven. So 2788 plus 61 gives us 2849, which is that 2849 that we have there. Our net trade creditors then is the difference between the two, 68,621. Pension fund, medical aid, UIF, SARS, we have already spoken about that. Accrued expenses are rental income. That is one of these that we've added, accrued rent expense, 23,822, which is that one. And now our VAT. Let's have a look at our VAT. Our VAT was the opening balance, which was a credit balance, which they gave us of 978, that one there. And then all these adjustment entries went through our VAT account. Bank charges, 105, TO good to 8 Rand, credit losses 126, that invoice, credit invoice 166, the postal box 21, the credit note that was reverse 144, I think was that one. There was no VAT on the rental expense. Why not? Because the guy from whom we are renting is not a VAT vendor, so there's no VAT implication there. Total VAT then 1044 credit balance, so VAT control account 1044. That is the end of this question. Really a very, very good question.